In this video, I will discuss Q4 FY25 result and Concall of Sky Gold. So, Sky Gold is a B2B gold jewelry manufacturer. They mainly supply gold to Collan, Carrot Lane, PN Gargill, and many other listed player and unlisted organized player. So, they have a 1000 kg per month manufacturing facility in Mumbai, in Navy Mumbai, and they are planning to expand their manufacturing capacity by 4.5x by FY28. So that is a huge expansion they are planning. And if we talk about their portfolio, they mainly they manufacture all kind of goods from starting from 9 carat to 24 carat gold, and they also manufacture or make studded jewelry, diamond, lab grown diamond also. They have started lab grown diamond from last quarter. So that is the company overview of Sky Gold, and now let's talk about the result of Sky Gold in Q4 FY25. So in terms of revenue, they registered a revenue of 1050 crore in Q4 FY25. Year on year grew by 106%. So in this year they have grew over 100%. If we see in FY25 they grew over 100% in every quarter, and so in the year also. And one more interesting thing, that they grew quarter on quarter also. They grew quarter on quarter by 6%. Whereas if we see the B2C companies like Collan, Titan, PN Gargill, they grew in this quarter quarter on quarter, because obviously the seasonality, and that reflects what, that Sky Gold is getting the market share from other companies. That is why the quarter on quarter they grew their revenue, in spite of whom Sky Gold supply their gold jewelry, they degrew in this quarter. So that is a really good thing. And if we talk about the guidance is for 5400 crore for FY26, that is 52% CAGR, and 7600 crore for FY27, which is around 50% CAGR. So the growth rate is also good in coming years, what the management is guiding us. And this 7600 crore for FY27, the acquisition they made in this quarter, Mr. Ganna and Gold Private Limited, that acquisition is pending to add in this guidance. So if they add the acquisition also, that should be around 7700 crore, should be around. And one thing is very good for Sky Gold is that they are constantly increasing their guidance, because I think up to quarter 2 FY25 they gave a guidance of 6300 crore for FY27, and then they increased the guidance to 7200 crore for FY27 in the last quarter, and they now again increased their guidance to 7600 crore by FY27. So they are consistently increasing their guidance. And also if we see the FY25 guidance, they gave a guidance of 3300 crore for FY25, but they done what? They done 3500 crore in FY25. So that is a really good thing, that a company is giving a guidance and increasing the guidance many times, and then also after that also they are beating their guidance. So that is really a really good thing. So that is the thing about the guidance. And if we talk about the volume in this quarter, they done a volume of 460 kg per month, increased their volume by 53% year on year, and quarter on quarter also increased by 3%. So in terms of volume also they are really doing a good job, and they are giving a guidance. They are giving a guidance of 650 to 700 kg per month in FY26, and at the end of the FY26 means in March FY26 they should exit at 650 to 700 kg per month, and by FY27 exit that should be around 900 kg per month. So guidance about the volumes are also really good. And as I said they have a manufacturing capacity of what 1000 kg per month, and by 27 by FY27 that should fill 100%. And then in the last quarter, in Q4 FY25, they got a order of export order. They got a export order of 200 kg per month. It is a recurring order, recurring export order. And about that order, they are saying that in the Q1 they will start with 70 kg per month, and then Q2 that will be around 150 kg per month, and in Q3 that should reach around 150 kg per month, and by the end of FY26 this order should be around 200 kg per month, as the promise has done by the that distributor in Malaysia. Okay, so that is also a good thing, that 200 kg from just one country of Malaysia, and just a one distributor is ordering whole 200 kg per month. So that is the thing with the export order. And if we talk about the new Indian clients, Reliance, they done the agreement phase with Reliance. And one thing is really good with Reliance, that Reliance may give the advance gold to Sky Gold, and Sky Gold have to do the job work for them, and that will help them for working capital, for receivables. Obviously the inventory days should be low for this, and then they are expecting Reliance to order in next 1 or 2 months. And that is also a good thing, that they are adding Indian clients also, and they have added one another Indian client, PMJ Jewelers, who are Andhra Pradesh based, and they have 50 stores, okay, in Hyderabad, and Sky Gold entered into 24 karat gold with them. 24 karat gold, it is mainly popular in China. Popular in China. It is really rare in India, but Sky Gold have started 24 karat gold with PMJ Jewelers. Okay, so that is also a good thing, that they are consistently adding the clients. Like Reliance is a big client, and in last few quarter also they have added Aditya Birla, they have added PN Gadgil, then Carrot Lane. So that is really a good thing, and that is why the management is also confident about their expansion. That they are planning a 4.5x expansion in capacities. And if we see, they are at what? They are at 1000 kg per month capacity. Whole capacity is at 1000 kg per month, and the capacity utilization is 60%. Okay, and they are planning for 4000 kg, 4000 to 5000 kg per month. So that is a really big expansion they are looking for, and the confidence about this expansion comes from what? From the gaining market share, from I mean adding clients, not only in Indian market, not only in domestic market, also in the export market. If we see that, if from Malaysia they got a order of 200 kg per month, in next few years this 200 kg may go up to 300 400 kg per month, and then it is from Malaysia, that 200 kg order. They might get some order from Dubai, the GCC countries, then other Western countries also. So that is a thing, that is why they are planning to expand their capacity by 4.5x by FY28. So that is the thing with expansion. Okay, and if we see the largest competitor of Sky Gold, they have a capacity of 2 to 3 ton per month. So already their competitor are 2 to 3x larger, okay, in terms of capacity, and that is why they are looking for the expansion very fast. If we see, and one thing with competitor is that they have an advantage of advanced gold business. The competitor of Sky Gold have a 90% of their manufacturing volume are from advanced gold. So that is why they are able to ramp up. If we talk about the competitor, because in advanced gold business, what happens that the clients give you gold and you just have to do the job work, and you have to give it. So the capital required in this business is really low, and that is why Sky Gold also entering this strategy, that they are saying that by FY26 the total volume should be total volume from advanced gold business should be around 7.5%. By FY27 it should be around 10%, and by FY30 the advanced gold business should be around 30% of total volume. So by this, what they are doing, they can expand very fast. Okay, because see what they are doing now, they are getting gold from the market, Sky Gold buying gold from the market, or they are getting GML from the banks, and then they are doing whole making gold jewelry making process, and they then selling that to cool land, to carat lane and all. Okay, so but in advanced gold business, what happens is that, let's say Conland, or let's say Reliance or Caratline, they will give you gold bars and all, and you just have to do job work, and there is a effect on the revenue side, because now what Sky Gold is doing, that they are buying gold and giving the whole, selling the whole jewelry to a B2C player, and that is why they can register the whole value of the jewelry. Okay, let's say if a jewelry cost 1 lakh rupees, they are adding 1 lakh to the revenue. But in the advanced gold business, as the gold are given by the customers, clients. That is why they cannot add the whole value of the jewelry. They just have to add the what? Add the charge fee, okay, of the making charge. They have to add the making charge in the revenue. That is why the revenue should be lower in the coming years. The revenue growth should be lower, but the difference is what? The PAT growth should be better, and that is that is the most important thing if we see, uh, because EPS and P all derived by what? PAT. So in future revenue growth may slow down because of the advanced gold business, which is good for the company, because the ROC ROE should be better, the cash flow should be better in this strategy, but revenue growth should be lower because of the lower ticket, lower fee income. Okay, so that is the thing, but PAT growth, PAT margin should increase in future. So that is the thing with advanced gold business. And if we see the export business, they are now at in this quarter, export business contributes around 8% to the revenue, and they are expecting the export business to be around 20 to 30% of the business in the coming years. And they already have established office in Dubai, and one thing they are saying that by FY27 FY27, and the export business should be around 20% of the whole revenue, whole volume. So that is the thing. And export business gives what to Sky Gold, because export business is a like cash and carry business. That is why the receivable days, the working capital cycle, working capital days should be lower for Sky Gold. Because if we see the this 20 kg per month order of that distributor in Malaysia, this is advanced cash business. Okay, the cash is already received, then Sky Gold will make the whole jewelry, whole order, and then they have to send it to Malaysia. So as the export business is asset light, because it is a cash and carry business, that is why export business will help to grow Sky Gold better if we see. And they are talking about 20 to 30% export business, and should be 20% of volume by 27 FY27. Okay, so that is the thing. And if we talk about another thing that is for export business, till now what Sky Gold was doing that, let's say they have to send gold jewelry to Malaysia for the business, export business. And if we see in India, gold is $4 to $5 expensive. Okay, that is why they have to take $4 to $5 extra from the client who are Sky Gold exporting. but what Sky Gold is planning is that they will bring gold from Dubai, where gold is $10 cheaper. Okay, $10 cheaper, so they can get that advantage, and then they can pass on to the customer also, so that the rate of jewelry should be lower. If we see that customer is getting better value, so that is the thing they are saying. And for for this they do not have to pay any kind of duty, because they are just bringing the gold from a country, just they are just doing the job work and then again they are exporting. So that is why they do not have to pay any kind of duty in terms of the gold. Okay, so that is one thing they are doing. And another thing Sky Gold is doing, and that they are planning to enter the unorganized jewelry market also. Like there is 50%, over 50%, 60% market comes from the unorganized jewelry segment. Okay, so Sky Gold is planning to enter that jewelry segment also. What the unorganized players do, that they have a distributor of jewelry, and that distributor gets jewelry from many unorganized organized jewelry makers. Like there is many jewelry makers in India, and Sky Gold is approaching to those distributors and then sell it to the unorganized player, and then the market becomes really big for Sky Gold, and Sky Gold will do advance cash for this business, because there can be some default. Okay, as they are unorganized player. So that is why Sky Gold is venturing into that space, and they will do cash and carry or advance cash or advance gold business with them. So that is also a really good thing, and that is the business update or the business visibility of next few years. And let's talk about the EBITDA margin. In this quarter they have registered a EBITDA margin of 6%, year on year increased by 110 bps. So that is also a good increase in terms of the EBITDA margin. That reflects what they are getting, the operating leverage. Okay, so that is also a good thing, and the EBITDA margin is consistently is at 5 to 6% for last few quarters. That is a really good thing, that the EBITDA margin is stable in Sky Gold. And if we talk about the PAT and PAT margin, they registered a PAT of 38 crore in Q4 FY25, year on year increased by 180%. So the revenue increased by 106%, PAT increased by 180%. Okay, so they are getting a huge operating leverage. In the last quarter also they were getting the operating leverage in the last few quarters, not the last quarter, but for last few quarters they are getting the operating leverage. And what the management is saying, that let's talk about this quarter's PAT margin. In this quarter PAT margin is around 3.5%. Okay, year on year increased by 90 bps, and the management is saying that PAT margin will be around 4.5% by FY27, and that is where the thing is really good, and that they will get the operating leverage in the future also. So that is also a good thing. And if we talk about the PAT margin for FY26, they are guiding us for a 4% PAT margin for FY26 and 4.5% for FY27. Okay, so that is also a good thing, and by this guidance we can calculate the PAT guidance. So they are giving a guidance of 350 crore of PAT by FY27. That is an increase of 63% CAGR. So that is also a really good growth. If we see, they are seeing a good growth in terms of PAT also. So that is the thing. we have to track the company obviously, that where the PAT is going. Now for now they are like 130 crore, and that this is a increase of 2.5x in terms of PAT in next 2 years. So yeah, the growth is really good in Sky Gold. And if we talk about the cash flow, they are expecting cash flow positive by FY27, and that is also a really good thing, because it is driven by what? It is driven by it will be driven by the advanced gold business. So that is the thing with cash flow. Working capital also, they are looking for a working capital of 50 working capital cycle of 50 to 55 days by FY27. Now I think it is around 70 days in this year, in this FY, and they are planning to improve it by 20 days in next 2 years. And in terms of long term, if we talk about the long term goal, they are looking for less than 50 days working capital cycle. So that is a really good thing. So that is the working capital cycle. And one thing the management is saying about the market is that as the gold price is increasing, the studded golds and 18 karat golds are demand in studded gold and 18 karat golds are really high, really getting high. So if we see in this category, studded gold have better margins versus the pure gold jewelry. So that is where Sky Gold can increase their margins also. So that is the thing with the market. And another thing with GML is another thing they have said about GML. GML is what? Gold metal loan. Like other company do what? Take money from the bank as a loan, okay, for some, let's say, capacity expansion or in any other business purpose. The other companies are doing what? Taking money from the cash from the banks. But what the gold jewelry company do? They take gold metal as a loan, okay, and in gold metal loan they have to keep some kind of collateral like bank FD or some land building, and they can give that as a collateral, and they take gold from the bank at a rate of 3%, 5%, 7%. So that helps what? That helps the companies to hedge, because they do not have to do any kind of expense in terms of the loan, and that is why that GML helps company for hedging. And one other thing is that the cycles, like working capital cycles, that should be lowered in by doing the GML, okay. So that is the thing. And Sky Gold now have a GML percentage of 5%, 5 to 10% of whole inventory, and they are looking for 20% GML in Q1 in terms of the inventory, in 20% inventory from GML in Q1, and by Q2 they are looking for 35 to 40% GML, and they are looking for 80% GML contribution in their inventory. So that is a really good thing, and by this they can save some margin, because if they buy pure gold from the market, they have to pay extra margin in terms of hedging, in terms of other duties and all. But if a company taking gold as a loan from the bank, they do not have to pay anything. They just have to pay the 3-5% of extra 3 to 5% of interest on them. But anyway, if we see the FD rate is 6 to 7% in India. The land rate also can grow in terms of value. So anyway, the company is getting the margin, the positive margin. So that is the thing with GML for Sky Gold. So if we talk about the Sky Gold as a whole, uh, every point of Sky Gold is in the positive direction. The whole company is going in a absolute right direction. You can take any parameter in terms of revenue, PAT margin, um, in terms of volume, in terms of expansion, in terms of client addition, anything. You can take any parameter in this business. All of them are going in a northward direction. So that is really good thing. And in this kind of market where the economy is not at the best point, but we can see Sky Gold is doing 100% right as of now. Yeah, it is always it is about tracking. We have to track all the businesses quarter on quarter, year on year. We have to track it. But for now, absolutely crystal clear result. And if we see the valuations, P is at 42x for a PAT growth of 60% in next 2 years, and then they can expand, they can grow their PAT to anywhere because they are expanding their capacity by 4 to 5x in next 3 years. So the deal looks really good in terms of valuation, in terms of business also. So that is the thing with Sky Gold. One thing I will ask, that sky is the limit. So that's it for the video. Thanks for watching.